Hey guys, what's up? Welcome back to another live stream. So, am I online? I think I am. We have a lot to talk about today, huh? Let me see. Live stream offline. I should be online, I think. Come on. Pop up. Can you guys listen to me? Let me see. There you go. Can you guys? There you go. What's up, guys? How are you? What a wild day today, huh? Jesus. It was wild out there, huh? So, welcome back to another live stream. We have a lot to talk about today, guys. We have Apple posted earnings on Thursday. Tomorrow, we have the Federal Open Market Committee. AMD just posted earnings. On Thursday, we have Shopify, Square, Coinbase, DraftKings also posting earnings. Tomorrow, we have Qualcomm also posting earnings reports, posting its earnings report. So we have a lot to discuss over here. Welcome back. Roby, what's up, bro? Janice, Frank Du, BB907. Hello, guys. Damian Torres. In Spanish, it would be Damian Torres. But I guess that Buenos trades, says Damian. There you go. Janice K, JD's22, PD Pop. There you go. Min Dungana. Hello. Lisa Mitchell. Hey, everyone. Well, thanks, guys, for joining me in another live stream. So what happened today in the markets, guys? Very ugly day across the board. Russell 2000 went down 2.10%. NASDAQ went down 1.08%. Dow Jones went down 1.88%. And the S&P 500 went down 1.16%. We basically saw de-risking today. We have a lot on the table, guys, between tomorrow and Thursday. So tomorrow we have the Federal Open Market Committee. We are going to have Mr. Jerome Powell speaking at 2:30 p.m. Eastern Standard Time. That is obviously going to move the market a lot. And then on Thursday, we have Apple posted earnings. And that is also going to be a very important market mover. Arguably, the most important, let's say, event of the week is the Federal Open Market Committee tomorrow by a long shot. But Apple is also going to move the markets as well. But obviously, since we have the Federal Reserve one day before the earnings report of Apple, then the Fed might affect for the better or the worse. We don't know. We still need to wait until tomorrow, whatever Apple is going to be, or whatever the reaction of the markets is going to be looking like on Thursday once Apple have posted earnings. Please drop a comment down below. Let me know if you want me to go over any given stock. I have some specific stuff that I want to tell you guys about, but in the meantime, just let me know if what's up, Moises. But in the meantime, let me tell you what could be potentially happening tomorrow with the Federal Reserve. So, first of all, guys, regardless of whatever the Fed says, regardless of whatever Powell says tomorrow, we are going to be trading the technicals. We are going to see a lot of volatility. And I just want to let you guys know what the markets are waiting for, okay? And over here, I have this guy, Nick Timiraos. This is the Fed Whisperer, which is some sort of connection or link between the real economy and the Federal Reserve. So take a look at this. This seems to clear the way for the Fed to raise by 25 basis points tomorrow. So the markets are already pricing in a rate increase tomorrow of 0.25%. That is already priced in, okay? The markets already know that that is going to happen, okay? So he was talking about the situation of the banks. He says, the focus is on what they say in their policy statement. So remember, this is very important. At 2 p.m., we are going to get the interest rate decision. It comes out at 2 p.m. It is a document, okay, that is posted on the website of the Federal Reserve. That is going to move the markets a bit, okay? However, the markets already know that the decision of the Fed is going to be an increase of 0.25%. So the big issue is Powell from 2:30 p.m. and on. And here, Timiraos also says, they don't want to lock themselves into something if they are not sure they are going to move. But they will, or they will not, they won't signal a pause here either. So check this out, guys. The markets want, or the bulls, I would argue, they want a pause. Okay? So from tomorrow on, the Fed fund rates are going to be sitting at 5%. And as I just told you, this was already priced in. This was already discounted by the markets. So here comes the big issue tomorrow. For the June meeting, which is going to be taking place on June 14, the markets want the pause. The bulls don't want the Federal Reserve to keep on hiking rates. If they don't happen to listen to Powell tomorrow saying that they are starting to think about pausing on June 14, then the reaction of the markets is very likely to be negative. And on top of that, the very best case scenario for the bulls tomorrow would be the Federal Reserve letting us know that they might be cutting rates later on this year, before this year ends. And why? Well, because what you guys can see over here on your screens are the Fed futures. So the markets are already discounting or pricing in not one, not two, but 3 rate cuts throughout this year. So check this out. So tomorrow, okay, we are going to have the Fed fund rates sitting at 5%. Perfect, no problem, okay, because we already priced in. This is already priced in. Then on June 14, we have the pause. Okay, we'll see if Powell says something about a pause. Then on July 26th, again, no more rate hikes. But check this out. On September 20th, or for the meeting of the Fed in September, check this out. The pivot. Finally, according to the bulls, they are getting the pivot this year. But wait, there's more. So we get a rate cut according to the Fed futures in September. Then in November, another rate cut, baby, 4.50%. And in December, guess what? A third rate cut this year. And if you guys don't happen to know this, every single Fed member has stated over and over and over and over again that they are not going to cut rates this year. So if tomorrow we happen to have a very dovish Jerome Powell, affected, I don't know, by the situation of First Republic Bank and stuff like that, and he happens to say, okay, guys, you know what? We're very likely to pause in the next meeting, okay, for the meeting on June 14. This is going to be very positive for the bulls. Remember, the bulls need and want a pause. However, what happens if Powell is asked about the situation of the banks? I guess that one of the questions that we are very likely to listen to tomorrow during the press conference that, as I just told you, starts at 2:30 p.m. is, are you guys willing to cut rates if the situation of the banks happens to get out of control? If Powell says, yeah, we would consider that, that's it, guys. To the moon, baby. We might be finally breaking out or bursting above 416 bucks in the SPY. You guys know that we have been trading inside a very narrow range throughout the last 3 weeks. So I'm thinking, I could be mistaken, I think that tomorrow we are going to either burst above 416 bucks in the SPY or maybe, drop below $403. So tomorrow is going to be a big day for the markets. And remember, the most important stuff comes out at 2:30 p.m. Eastern Standard Time. I am going to be obviously in the main chat of our Discord, telling you guys let's say the most important areas of interest. So this is the situation of the Federal Reserve. What a day! Tomorrow is going to be a wild day. The Fed needs to be more aggressive as aggressive as possible. Yeah, I mean, we still have an inflation problem, and I don't want to talk about macro stuff here, guys, because tomorrow we are simply going to be trading the technicals. But yeah, if you ask my opinion, guys, what I think is going to happen tomorrow, I can share with you guys my opinion. I think that the bulls aren't going to get what they are looking for, which is Powell somehow letting us know that a pause is just around the corner, that they are going to make a pause for the June meeting. And I don't see Powell saying I mean, by any stretch of the imagination that they are changing their mind when it comes to, or that they are thinking about cutting rates throughout this year. I think that Powell is going to say, in my opinion, and again, I could be mistaken, we are not cutting rates this year. Sorry, guys. I'm sorry, not going to happen. If the situation of the banks happens to get out of control, we have the necessary tools in order to provide liquidity to the system. So don't worry about it. And we don't know what is going to happen for the meeting of June. If we are going to keep on being data dependent. Let's just put it that way. If that is the case, I think that taking into account the level in which the SPY is trading at as of now, we are way off the lows of January. I think that the reaction is going to be negative. The other day, guys, by the way, I was reading an article and that stated that for the big tech stocks, in order to justify their current valuations, all of them, Nvidia and Microsoft and so forth, they need the Fed fund rates to sit at 3%. 3%. Figure that tomorrow the Fed fund rates are going to be at 5%. So the bulls need a dovish Fed tomorrow. And again, regardless of whatever Powell says, we're going to be trading the technicals, okay? That's the most important thing that we need to keep in mind for tomorrow. I'm number 2, like, okay, 32 people should be there. Come on, guys, hit the like button over there. There you go, absolutely. Okay, guys, Apple. What are you guys thinking about Apple? This is going to be a huge earnings report. Huge. So, from a technical standpoint, there's absolutely nothing wrong with the Apple chart. We have an upward sloping 100 DMA, upward sloping 200-day moving average. We also see over here an upward sloping 5-day moving average. Apple actually went down today, not much, only 0.62%, and it closed the trading session at $168.54. However, guys, you need to keep in mind that Apple is up year to date 35%. So the higher the stock of any company goes, the more demanding the markets are when it comes to any given earnings report. So the markets, or for the markets, or for the reaction of the markets, in order to be positive, Apple is going to have to beat across the board. There are some, let's say, wild cards that Apple could be putting on the table. You know, they could talk about artificial intelligence. They could be announcing a buyback and stuff like that. But Apple needs to post a very solid report for the reaction of the markets, or for the markets to be positive about the report that is coming out this Thursday. So where could be Apple heading to this Thursday? So check this out, guys. The average move of Apple when posting earnings is 4.3%. And the expected move for this upcoming report is 4.2%. So if Apple were to close this next Thursday's trading session at around the level that it closed the trading session at today, $168.54, let's say that Apple could be going 4% higher. That would be taking Apple, or Apple could be climbing up to something like $174. And to the downside, we could be seeing Apple maybe falling down to $160-ish. So keep in mind on Thursday that the expected move is 4%, okay? In the case of Apple, obviously, guys, I will never, ever recommend to anyone to gamble on earnings. That's not my style. I never do it. I already lost enough money gambling on earnings. But you have to keep in mind that the expected move is 4% to either the upside or the downside. And if we take a look, guys, I want to show you over here. This is a tool that I use on a daily basis, Market Structure Edge. This is a tool that I use in order to define, in order to know what the supply and the demand is looking like for any given stock. So in the case of Apple, let's see. Okay, sorry, I need to log in again over here. There you go. Okay. It locked me out. Okay, let me type here Apple. So let's see what the demand and the supply of Apple is looking like towards this upcoming earnings report. And for the ones that haven't been in a stream of mine before, what you guys can see on top is the demand, so buyers basically. This blue line that you guys can see over here, this is the demand. And at the bottom, you guys can see the supply, or sellers in this case. So in the case of Apple, and take a look at this market structure sentiment, which is signaling 5. This is 5 out of 10. The markets are kind of neutral. The markets are not really bullish into this report, and they are like, 50-50 when it comes to the possible outcome that we are going to see on Thursday after hours. And why? Well, because the demand is basically flat. However, we have the supply rising and a bit above its average. Okay, the average would be these dotted lines that you guys can see over here. So the markets are a bit, let's say, skeptical when it comes to the report that is coming out on Thursday. But from a technical standpoint, Apple is obviously under the control of buyers, no doubt about it. This is an uptrend, and it is trading above all the moving averages, so nothing wrong with the technical chart. But let's see what happens with Apple. I know that EV curve blew up. Wow, says Lisa Mitchell. What do you guys think about Apple, guys? Do you think Apple is going to beat on earnings or what? By the way, the commercial guidance is going to be very important, guys. So we have known that the MacBooks shipments have decreased significantly over the throughout this year. Let's just put it that way. And the MacBook revenue is usually a leading indicator when it comes to iPhone sales. And Apple is also going to be some sort of gauge when it comes to demand for semiconductors and let's say and phones and iPads and let's say and these kind of devices in or let's say around the world, because Apple is selling phones in China, in Europe, obviously here in the US, in South America. So this is going to be a very big report. China just reopened. Let's see what Apple has to say when it comes to the Chinese economy. Is the demand strong? Is the demand slowing down? Lisa Mitchell says down. If you ask me, and we can take a look, by the way, guys, at the report that AMD just posted. It is down after hours, right? But I don't want to go over AMD quite yet, guys, because I think that we have the press conference kicking off right now at 5 p.m. So if the CEO of AMD comes out talking about artificial intelligence here, artificial intelligence there, and we are going to be the #1 company when it comes to AI, then maybe we could see the stock going higher. But in my opinion, the demand for semiconductors has slowed down significantly, and I am not very positive when it comes to the earnings report of Apple. And on top of that, guys, this stock has run up a lot throughout this year, as I just told you, almost 35%. So I think that this run up of Apple is a bit overdone, according at least to my opinion. Okay, please let me know if you want me to go over any given stock. What about Coinbase? What do you guys think about Coinbase? They are posting earnings on Thursday. This is going to be a wild one, guys. So Coinbase went up today 2.35%, and it closed the trading session at $51.32. Well, I'm curious about these guys because the markets got killed today, but we had Bitcoin going higher, right? So that's the reason why Coinbase went up today. Yeah, we have Bitcoin trading at $28,810, up today 3%. Yeah, that's the reason why. Coinbase is pretty much a proxy to the crypto market in the stock market. So it went up today basically because we saw Bitcoin going higher. This is a whole different story, guys. From a technical standpoint, this is a major downtrend. We can see a downward slope in 200 EMA, downward slope in 100 EMA, very ugly looking chart. We can also see over here a downward slope in 5-day moving average. So this technical chart is under the total control of sellers, and this also implies that let's say that the opinion of the markets, or that the expectations of the markets into this report is not very positive. By the way, let's check what Coinbase has done after having posted its last 4 earnings reports. So on its last earnings report, it dropped. On its second to last earnings report, it also dropped. On its 3 earnings reports ago, it also dropped. And 4 earnings reports ago, it also dropped. So, oh my God, 4 out of 4, guys. This stock has been going lower on every single earnings report recently, or at least during the last year. So is that going to be the case of Coinbase on Thursday? By the way, guys, the implied move, or the expected move of Coinbase, is going to be crazy. Check this out, guys. Let me pull up here. Let me type here Coinbase. Let me see. There you go. There you go. Coinbase Global. So check this out, guys. The expected move, 12.80%, 13%. We can round it up. SPY, absolutely. Let's go over the SPY, sure. And I can share with you guys my pre-plan. Let's just put it that way, and for tomorrow. So the average move of Coinbase when posting earnings is 8.4%, and the expected move tomorrow, 12.80%. Jesus Christ, guys. This is going to be crazy. So let's say that Coinbase closes the trading session on Thursday at around $51.32. Let's say that it goes higher 13%. That would imply that Coinbase could be climbing up to $60. And to the downside, a drop of 13% would bring Coinbase down to $45. And I guess that the implied volatility is very high. Let me see. So it isn't worth it, guys, buying calls, either calls or put over here. Check this out, guys. The implied volatility, 183%. So keep in mind, guys, that with this implied volatility, regardless of whatever you're buying, puts or calls, you're paying very, but very expensive options. And remember, once any company has posted earnings, we have the IV crush, the implied volatility crush. So the options lose a lot of value. This is not a stock that you want to be gambling on, for sure, because the implied volatility is extremely, but extremely high. So let me take a look at the market structure of Coinbase. So what are the markets thinking about Coinbase from a demand and supply standpoint? Let me take a look over here, Coinbase. Take a look at these, guys. Jesus Christ. What is the ideal implied volatility for you? It depends on the stock. In my case, Rawi, I never, ever buy either calls or puts when the implied volatility is above 70%. But that's my personal style. It depends on the stock, okay? So yeah, I never buy options, as I said, either calls or puts if the implied volatility is above 70%. Check this out, guys. Remember, on top of this chart, we have the demand, buyers, basically, okay? And remember that this blue shaded region is the demand. Take a look. The demand collapsed completely. So buyers are nowhere to be found in the case of Coinbase. And again, this stock went higher today basically because Bitcoin had a run-up. Otherwise, Coinbase, and taking into account that the markets got killed today, Coinbase would have probably keep on going lower, right? And take a look at the supply. The supply is above the average. Remember that the average is represented on this chart by these dotted lines, these dotted black lines. So we have an ascending supply that is above average, and the demand collapsed. So I'm also thinking, and forget about the earnings report that is coming out tomorrow, on Thursday, that if Coinbase tomorrow happens to make a test of $54, $54 is very close to the 100-day moving average, and $54 happens to also be a previous area of support back from early February. Remember, when areas of support are broken to the downside, they start to act as a new resistance. So any failed attempt at bursting above 54 bucks could be an opportunity in order to short Coinbase. Maybe this wouldn't be the best moment, obviously, because the implied volatility is very high. But if we look for farther out dated options, we are going to probably get a lower implied volatility that could let us maybe short Coinbase via put options, guys. If we happen to get puts that expire, I don't know, maybe in July, in I don't know, August, September, don't get short dated options because you're going to be paying or at least don't get options, don't get puts that expire before before the earnings report on the same day of the earnings report, because you're going to be paying a very expensive option. There you go. So we have over here, I'm being asked about the SPY. Let me take a look at the SPY. Okay, let me see over here. So any technical analysis, guys, about the SPY is going to be depending on the Fed tomorrow. Obviously, that is going to give rise to a lot of volatility, okay? So the main line of defense for the bulls tomorrow is going to be 404, 404 bucks in the SPY. And let's say that on the flip side, the main line of defense for the bulls, the main spot in which the bulls have to play, the bears have to play defense, is going to be 416 bucks. As I said before, if we happen to have a very dovish Jerome Powell, even talking about possible rate cuts throughout this year, I think that the bulls could be easily taking out 416 bucks. Or on the flip side, if the bulls end up being empty-handed, if they don't get neither the pause or a possible rate cut, I think that this support of $403.20 approximately could be taken out by the bears. I could see this happening. And mind you, guys, if this support of $403, 403.50-ish happens to be broken to the downside, then we have a huge support. But this is a huge support at 400 bucks. So 400 bucks is not only a fat number. Fat numbers are very important in this business, but 400 bucks happens to coincide with this upward sloping or semi-upward sloping 100-day moving average. So this is going to be a very big level for the bulls. I think that they are very likely to at least defend this level in a successful way, at least on its first test. And this could be an interesting area, in order to try to take a bounce back up trade if this area of 400 bucks happens to be tested in a quick way, in an aggressive way. Let's just put it that way. So these are the levels that I am going to be keeping a close watch on tomorrow. And as I said, guys, I am going to be in the main chat letting you guys know what are the main lines of defense for both bulls and bears. And check this out, guys. I wanted to share this with you guys. So today we saw a very negative day, right? Take a look at the spot. And the SPY, the S&P 500 went down 1.16%. We saw a very negative day, right? But check this out, guys. Take a look at the spot in which the bulls managed to find support today. $406 in the SPY. This is an area that coincides with this anchored volume weighted average price that you guys can see over here that comes from all-time high. Very important spot for tomorrow's trading session. Because remember, the markets are going to be trading from 9:30 a.m. until 2 p.m. So if you guys are interested in taking trades before the Federal Open Market Committee, keep a close watch on 407. Opening the trading session above this anchored volume weighted average price that comes from all-time high, 407 bucks, is positive for the bulls. And opening the trading session below 407 bucks is going to give the bears a reason to try to bring the SPY lower before the Federal Open Market Committee. Okay, I'm being asked about Qualcomm. Yes, they are posting earnings tomorrow. What is AMD doing after hours? Let me see over here. Let me see. Advanced Micro Devices. Is it going higher or what? Because I guess that the press conference is going on as of now. It is, I mean, what is going on with AI, guys? Come on, pump it up. Okay, Qualcomm. I'm taking a look at AMD because obviously AMD must be also affecting Qualcomm. Even though in the case of these two companies, both are semiconductor companies, but in the case of Qualcomm, this is a stock that has a way more reasonable valuation relative to AMD. So we can make the case that the markets aren't going to be as demanding with Qualcomm relative to AMD. Okay, Qualcomm, it went up today 0.23% and closed the trading session at $116.11. So not a good looking chart, even though the bulls managed to close the trading session today above the 5-day moving average, but we can see over here a major downtrend with a downward sloping 200-day moving average, downward sloping, not a downward sloping, but below, but the bulls are below the 100 DMA. We can see the relative strength index or the RSI sitting at 48 points. I wouldn't touch Qualcomm unless I have a confirmation from the buyers that they are definitely stepping in. What would be that confirmation, Moises? Well, taking out $121. I wouldn't touch the Qualcomm, and you guys know that I don't like trading downtrends. And since we are seeing over here a major downtrend, I wouldn't trade it below this 100 DMA. Taking out $121 and bursting above this 100 DMA would imply that the bulls might be about to fill another important gap, very important gap in this case, up to $128, which happens to be a previous resistance back from late March. So a no touch for me unless the bulls can take out $121. A bull would also argue that maybe over here we are kind of seeing some sort of double bottom at around $113. So maybe a bit of consolidation, slightly above $115, 5-day moving average, could be a sign that the bulls are actually thinking about completing this double bottom and maybe, being able to take out $121. Let me take a look at the market structure of Qualcomm. By the way, Qualcomm is posting earnings tomorrow after hours. So let's see what the markets are thinking about when it comes to Qualcomm. This is not such a volatile stock like Nvidia and AMD. So the average move of Qualcomm when posting earnings is 6.7%. We can round it up, 7%. And tomorrow the expected move is 6.5%. So let's say that Qualcomm closes tomorrow's trading session near this level, $115. Let's say 7%. Let's just round it up. 7% would imply that Qualcomm would be climbing up to the downward sloping 200-day moving average, so $124. And to the downside, wow, this would be a nasty drop, Moises. This would imply that Qualcomm could be paying a visit down to $107, which, by the way, happens to be a previous support back from late December of last year. So this is also going to be an interesting stock to take a look at tomorrow. PayPal for swinging long term. Let me take a look. Sure, absolutely. So let me see over here. We are 34 minutes in. Wow, time flies, guys, when I'm live streaming for you. Okay, PayPal. Let me see. Is PayPal still downtrending? Probably, right? Let me see PayPal holdings. Oh, yes, it is. So, I mean, for the long term, I would have to go over the fundamentals of PayPal, balance sheet and income statement, cash flow statement and stuff like that. This is something that is going to be a bit boring for most of you guys in the stream. From a technical standpoint, guys, not a good looking chart. We have a downward sloping 200-day moving average, downward sloping 100-day moving average. And take a look at how the bulls, guys, tried to burst above this downward sloping 100-day moving average, and they couldn't do it. Guys, when you see moving averages in a downward sloping position, that implies that they represent a huge level of supply or resistance. So the bulls burst above 100, were able to take out to burst above this downward sloping 100-day moving average around $75, but they couldn't hold it as support, not even during one trading session, not even during one single trading session. So not a good sign. There is not a lot of conviction over here. And why? Well, because we have a lot of people trapped in PayPal. So that is the main problem, guys. When you see downtrends, and again, I have told you on multiple occasions that I don't like to trade downtrends. The problem with downtrends is that we have a bunch of buyers trapped all over the place. That's the reason why I don't buy downtrends. And I don't even try to take trades on downtrends. Because the higher a stock goes inside a downtrend, I am very likely to find very important areas of overhead resistance because I have buyers trapped all over the place. And that's what happened with PayPal. It took out this 100-day moving average, and obviously the people that were trapped over here, they just decided to break even or close their positions with a lesser loss, let's just put it that way, and PayPal kept on going lower. So this is not a name that I am going to trade because it is in a downtrend, but I don't know, guys. Keep a close watch on $70. $70 happens to be a previous support back from early November of last year. That could be potentially acting as support if $70 happens to be broken to the downside. Then we have $67-ish. This is a previous support back from mid-December of last year. I wouldn't touch PayPal, as I just told Moises, unless the stock of this company is able to burst above $75-ish approximately. Nvidia, thoughts after that big run? Absolutely. Let me take a look at Nvidia over here. Okay. Let me see. Is it down after hours because of AMD? It might. Right. Let me see. Yeah, it is going lower after hours, and the bulls are trying to hold this 5-day moving average at around $278. Well, from a technical standpoint, this is an uptrend. Clearly, we can still make the case that Nvidia is too far away from home base. When I'm talking about home base, I am talking about this upward sloping 100-day moving average and this downward sloping 200-day moving average. So the buyers are in absolute control of this technical chart. If I zoom in over here, if the markets go higher tomorrow, I'm starting to think that since the earnings report of AMD so far hasn't, or the reaction, since so far the reaction towards the earnings report of AMD hasn't been positive, I think that tomorrow we might see downwards pressure into the Federal Open Market Committee. But keep a close watch on $178, guys. This is a very important spot. We have an upward sloping 5-day moving average, and we also have over here a previous resistance back from mid-April. If the bulls of Nvidia can hold $278 as support, then they could be easily gathering momentum in order to fill once again this gap up to $290. This is a previous resistance back from yesterday. So this would be the bullish scenario. What happens if Nvidia opens the trading session tomorrow below $278? If they happen to fail at bursting above $278, then we could see Nvidia dropping down to, let me see over here, we could see Nvidia dropping down to $264. You guys know that this is a very volatile stock. $264 is a previous support back from early April. And of course, and as I always tell you, and as I have always told you, if you're taking trades on Nvidia, you need to monitor this semiconductor ETF here, SMH. So if SMH is going lower along with AMD, that's a sure signal for Nvidia. for the most part. So these are the levels that I am going to be monitoring tomorrow on Nvidia. Okay, 278 as support, good sign. Failing at 278 could be opening the doors for a quick visit down to $263. And mind you guys, if we happen to see a quick drop down to $263 in normal market conditions, I think, let's say in one single trading session, this could be a buy the dip opportunity, not for the long term, not to start a swing trade on Nvidia, just to play a quick bounce up, a quick bounce back up on Nvidia. Let me take a look at the market structure of Nvidia. I'm curious. Let me see over here. So let me pull up on market structure edge. Okay. So what is supply and demand looking like for Nvidia? Let me see. Let me take a sip of whatever this is. Okay. Let's see. This is important, guys. Take a look, guys. We have the supply rising and above average. Remember, the supply is at the bottom and the demand is on the top of the chart. The demand has flattened out, so we don't have like new buyers stepping in over here, but sellers are starting to outnumber buyers. So I'm thinking that if Nvidia happens to fail that bursting above 278, and if we happen to see the Nasdaq 100 and the semiconductor ETF going lower, and also AMD going lower, this could be a short signal on Nvidia. Absolutely, yeah, absolutely. Anytime, whenever you guys want. Okay. Let me take a look at, before I wrap it up, let me take a look at DraftKings, which is also posting earnings on Thursday. Take a look at DraftKings, guys. It went down today 2.52%, and it closed the trading session at $22.03. Wow, what a turnaround for DraftKings, guys. This stock was trading at $10 back in late December, and now it is a $22 stock. So very good sign for the bulls over here. We can see on the 4-hour chart an uptrend. We have an upward sloping 200-day moving average, downward sloping 100 DMA, downward sloping 5-day moving average. And despite the fact that DraftKings went lower today, the bulls were able to hold as support this 5 DMA at around $21.40. So this is a good sign. And if I draw a line over here, take a look at how this upward sloping 5 DMA happens to coincide with a previous resistance back from late February. Good. I mean, this is a good support for the bulls. Watch out for DraftKings tomorrow, guys. If the bulls are able to hold $21-ish, $21.20 as support, they could be gathering momentum in order to fill this gap once again to the upside up to $22.72. This could be a 5% profit trade. Nothing to sneeze at over here. Okay, when it comes to the report, let me take a look at earnings whispers. So what are the markets waiting for when it comes to DraftKings? Let me see. DKNG. DraftKings, come on. Please, pop up. Something went wrong, it says. Why? Nothing should have gone wrong. I'm paying for my subscription, assholes. So pull up the information, come on. Hey guys, I'm sorry. I cannot see. Why? What happened here with earnings whispers? Let me open it again, guys. Sorry. Okay, let me see. I want to take a look at this again. Maybe it is an issue with earnings whispers. Yeah, something went wrong with the website. I mean, I can estimate the expected move. Taking a look at the options of DraftKings. So let me see. They post earnings on Thursday, which is today's the 5th. Let me see. So yeah, we have a pretty much a 3-back expected move over here on DraftKings. Okay, so let me see. If it is a 3-back, either push to the upside or drop. In the case of DraftKings, that would imply, guys, not even the daily. Let me take a look at the 3 chart. Okay, so 3 bucks, guys. DraftKings could be going higher up to $25. Yeah, $25 happens to be a previous resistance back from February of last year. And to the downside, if DraftKings happens to drop at around $3, and if obviously, guys, if DraftKings happens to close Thursday's trading session around these levels, so $3, you're looking at a potential visit down to this area at around $18. Yeah, pretty much $18. And $18 happens to be a previous resistance back from early October of last year, and also a previous resistance back from early November of last year. So let's see what happens in the case of DraftKings. Hey, by the way, let me take a look at the market structure. So what are the markets thinking about DraftKings when it comes to supply and demand? Let me see over here, the KNG. It is a very good looking chart, guys, an uptrend. So the price action, guys, is telling us that the markets are being optimistic about DraftKings as of now. Okay, we have some sort of decline in demand, but that it is way above the supply, and the supply is decreasing and below average. That implies that from a market structure standpoint, DraftKings is under the absolute control of buyers. So we have a technical chart that tells us that the net aggregate opinion of the average market participant is positive towards DraftKings. And on top of that, the market structure tells us that the markets are expecting a good report of DraftKings next Thursday, because we have way more buyers relative to sellers. And take this into account, guys. The stock of this company has gone up year to date 104%. Check this out, guys. Think about the psychology of the average market participant over here. So we have a stock that has doubled throughout this year, all right? And yet still, let me close here, what's up? And despite the fact that we have seen amazing gains throughout this year, in the case of DraftKings, we still have buyers outnumbering sellers by a very, very wide margin. So this is a very, very encouraging sign for DraftKings towards the report that is coming out on Thursday. Okay, guys, you know the deal. I live stream throughout the whole trading session for the members of my Patreon. At this time, I am extremely tired. We are, how long? Let me see. We are 47 minutes in, so thank you very much for coming over. I'm extremely tired. Remember, I am live streaming for you guys on Tuesdays after market close at around 4:30, 4:40 p.m. So thank you very much for coming over, and be ready. Tomorrow is going to be a wild, wild day, guys. So thank you, and see you guys in the main chat on Discord, and obviously I will see you guys once again live next Tuesday. Thank you very much, guys. Okay, take care. Enjoy the rest of your day. Bye. Bye, Janice. Bye-bye. Bye, guys. Take care.